Welcome to Investors Insights. Our topic today is better or worse. I'm thrilled today to have the opportunity to be with my colleagues, Bobby Norman and Adam Van Zant, and we're going to discuss what's going on in the markets and the economy in relation to your portfolio. We also are going to continue this discussion throughout the week on our social media in terms of LinkedIn, Twitter, Facebook. Please continue to follow us on that. And for those of you that have shared it with others, we really appreciate the way you've shared our vlogs or communicated with us through email and phone calls as to what you like and also wanting more information. And today we've got a topic that you should be very interested in. For better or worse, in terms of inflation, in terms of what's going on in the market. And guess what? In approximately a little over 90 days, we will be in the 2022 year. So on that note, Bobby, you started us off this morning really focusing on inflation and supply chains, those kind of things. Go on and take it from here.
Yeah, great. I want to give our viewers an update on inflation and supply delays that we're seeing impact what the Fed's doing and how supply constraints are impacting corporate earnings. So as you can see in this chart, we're still seeing a higher inflation increase this year, and it's an issue that the market will have to deal with probably for some time based on the supply constraints that continue to get worse. And also, look at this chart here. It shows the percent of businesses that were reporting supply delays last week. Over 40% of businesses are reporting delays, with significant delays in the construction, food, and wholesale trade industries. And this matters. Look at the current inventory to sales chart in the auto industry here. These are major companies that employ a lot of people that are seeing significant drop in sales due to supply shortages. So the question is this: when will all the supply shortages get better? We're following things closely, but based on the current fact that over 60 container ships are currently waiting to dock in Southern California, really the short-term solutions are scarce. Without the dependence on fully functioning factories, employed docks, affordable container ships, and available truckers, the empty shelves and inflation will most likely continue into the foreseeable future, especially as we head into the busy holiday spending season. So basically, start shopping now.
No, there's no doubt about that. And I thought you had really valid points in our discussion. You know, and last week, we had one retail shoe manufacturer. They watched their stock drop 6.2% because they gave their forecast for the 2022 year as they were going into it. And, you know, the reason was supply chain. Most of their product is made in Vietnam. And for 10 weeks this summer, Vietnam shut down most of the manufacturing in that country. And they're now, that rippling effect is impacting this retail shoe manufacturer. Another one, we had a retail store chain. They weren't hit as hard on their individual stock with their announcements, but they're saying that they're seeing a 3.5 to 4.5% inflation rate in products like paper goods, water, other types of consumer goods that people use on a day-to-day basis, all because of supply chain. So this may be selective inflation that we're going to see based on what products can get here and which ones cannot. But you're right, Bobby, we're going into the holiday season, and it's probably wise for people to start the shopping now, for that very reason. Adam, we've still seen strength in the market. We've had a very volatile market this month of September. We've got a couple of more days to go. October, there's a lot of cash on the sidelines. We're still seeing corporate earnings looking good. Talk to us about the resistance and support levels we're seeing in the different indices.
Yeah, thanks, Greg. So to your point, last week we saw a lot of volatility along with the month of September. So the S&P Friday close came in at 4,455, giving us a new resistance level of 4,485 with a new support level of 4,425. Also want to discuss the 20-day moving average. So that consists of the last 3 weeks worth of trading, is currently sitting at 4,472. So despite the volatility, as you discussed, Greg, we're still seeing a 20-day moving average sitting close to that resistance level. So it is going to be important to look at the consumer moving forward in the last 3 months of the year, the last quarter, and directly to both of your points, can they hold up with supply chain disruption have an effect on that as well.
Yeah, there is no doubt there's a lot of cash still on the sidelines looking as to, what they need to do. And if corporate earnings continue to be reported strong, and this past week, one of the debates the bears have, those that think the market's going to go down, is that extra cash that's out there keeps coming into the market as they see, good positive news. So we're watching that very closely. Fourth quarter, could very well be a strong quarter for the 2021 year, depending on supply chains. So we don't have any economic surprises in that area. A lot still going on. Will the Fed Chairman Jerome Powell be reappointed? Still looking at tax discussions coming out of Congress that could have emotional input. It's not going to be a dull fourth quarter, but we're going to keep everybody updated as this continues to evolve. We hope you have a great rest of the week, and we'll keep you updated. Thanks.